All right, we've been talking about the president's taxes, well, whether it's a legitimate issue or not. Dan Geltrude, besides being a great market read, is an accountant by training, so he knows what's legal and what is not. And Dan, looking at this, a lot of people, whether they're accountants or not, but they look at it and say, how is it that I'm paying a hell of a lot more in taxes than, at least in the latest 2 years, if this New York Times is right, the president has? It doesn't seem fair. His tax bill of about $750 pales in comparison to the top 1% who pay on average $430,000, or the top 10th of 1% who pay an average of $2.1 million. You've seen this ad that the Biden camp is using showing an average nurse paying over $10,000 in taxes. Technically, they're right. They can make these comparisons, but argue about what is legal and not. We assume, we're taking the leap here, that the president exhausted all tax code allowances and rules in his favor. He would not be the first business titan or company to do so. But explain how something like that happens.
Sure, Neil. And it's kind of funny because 4 years ago, almost to the day, you and I were talking about the same issues related to Donald Trump's tax returns, yet we still don't have his tax returns. So we're going to have to make some assumptions. So we know that Donald Trump is in real estate. And one of the big plays in any real estate investment is the depreciation. And you have to keep in mind that income and taxable income are not the same thing. In other words, Donald Trump could have plenty of cash flow coming in from his real estate investments. However, the depreciation, which he is legally allowed to deduct, can certainly wipe out his entire income. And you say, well, how could that be possible? Well, let's just use a quick example, Neil. If Donald Trump buys a building for $100 million and he puts $10 million as a down payment, he's got a $90 million mortgage. However, he could take full advantage of that asset being able to be depreciated at the $100 million mark. So whatever income he's taking in from that $100 million investment, which is probably very little of his own money, he's getting tax benefit for. So it's a smart play by a real estate investor. Does it look bad to a lot of people? Absolutely. Is there anything legally wrong with it? Absolutely not.
Are you suspicious, though, when you see some of his children and consulting fees given them and write-offs as a result, or some of these other things that pop up, including that the president wrote off $70,000 in hairstyling expenses? People look at that and say, wait a minute, that sounds weird.
Well, to start with, if he spent $70,000 on his hair, I think that's a bigger issue than the tax deduction. Just saying, Neil. But look, back then, there is some precedent, by the way, for somebody like him who was a celebrity on television to be able to get some write-offs related to his appearance. I know it sounds crazy,
sure,
but that doesn't overly concern me. Nor does it concern me, Neil, that he could have had family members on the payroll. There's nothing wrong with that. You know, to be able to prove that a tax crime was committed here, because that's where everybody wants to go when they're using the terminology tax avoidance, you have to prove that the taxpayer intentionally did something wrong. Not that they were in a gray area, not that they got aggressive, that they actually were aware that tax was due and purposefully didn't pay it. And that's going to be really, really difficult to prove, Neil. And Trump would be really crazy, being such a high-profile person, to mess around with his taxes when you know he's going to be audited, and he says he's been audited under audit for the last 10 years. To play with your freedom.
Yeah, this one refund he got as a result. That's the source of this ongoing. It looks like multi-year audit on this $72 to $74 million refund. I mean, it does call into question his debt. A lot of it is coming due. If you buy this at face value, this New York Times report, and there are a lot of details left out, to your point, Dan, if it is coming due within the next year or two, it would indicate, at least you were learning in the Times, this could be wrong again, he doesn't have the money potentially to pay that, or can he simply renegotiate it? I mean, what did you glean from that?
I didn't glean too much from that, Neil, because if he has debt coming due, when you're a real estate investor, you love debt. You play with debt all the time. That's how you become rich. And certainly that's what Donald Trump has done. So if he's got a lot of debt that is becoming due, he is basically going to renegotiate and refinance. He is not going to default on that. He's been down this road before with his casinos and other investments that he had. When the economy went bad, he was in a lot of trouble because he was overwhelmed with debt. But remember, Neil, when you have that much debt, the banks are your partners. They're stuck with you. They can't let you fall off. They have to figure out a way to help you out of that mess. So I'm not overly concerned about that.
Got it. What's that old line too? I mean, when you owe, the bank, a little bit of money, the bank owns you. When you owe them a lot of money, you own the bank. Might be a classic case here. What's going on, Dan? Thank you very, very much, my friend. I do want to emphasize as well, we're not taking sides in this tax